welcome to our weekly buy-to-let mortgage market update. Here I am in Kingsbridge in Devon. We're having a really nice time away. It's a really, really beautiful part of the world, actually. We've been to various beaches in the area, so Brixham, we've been to Totnes, we've been to Salcombe, absolutely beautiful. Unfortunately, the weather is not being particularly kind to us. I don't know if you remember, but I think last week we had a bit of a mini heat wave going on in the UK. This week it's a combination of bright sun, gale force winds and torrential rain, so much so that actually at dinner last night I spent most of the meal explaining to my son the term biblical rain. There you go. UK holidays, right? So look, thank you so much for joining us. We've got lots of great stuff to cover off this week. I'm going to keep it quite brief for obvious reasons, but there's been some really positive lender changes to share with you. I'm also going to be touching on the expectation on property prices going forwards. Now the market is starting to slow down a little, and also we're going to be just sharing some really great news with regards to EWS1 forms and how the market's looking with regards to that. So lots of good stuff to cover off this week. Okay, so first up, in the last week we have seen TML, the mortgage lender, make some changes to increase their maximum loan to value to 80%, and their rates there now start from 4.39%. Where does that sit in the market? Well, look, they are lending to large portfolio landlords and also to limited companies. So 4.39 is, I wouldn't say it's market leading by any means, but it's certainly not the most expensive rate either. It's not bad, but what actually is really significant is the fact we have another lender coming in at 80% loan to value. And I don't know if you watch these videos frequently, but if you do, you'll really understand that this is kind of a theme at the moment. More and more lenders are coming back into this space. Why is that? It's going to be a combination of a few things. First of all, there's certainly more kind of comfort around the expectations around the property market, house prices. When lenders start to increase loan to values, that really indicates a sign that they're not expecting prices to come down. But also I think there's a real kind of concerted effort from the lenders at the moment to really look at their lending policy. They have been incredibly busy over the last 6 months to a year because of the stamp duty holiday. So now they're really looking at what they've got to offer to borrowers and trying to understand how they can broaden things, make themselves more attractive to bring in new business going forwards. So 80% loan to value from TML. They've also interestingly reduced their minimum loan amount down from £75,000 to just £25,000, and their minimum property value is now £50,000 unless the property is an HMO. These lower loan amount mortgages are fairly hard to come by, particularly in the specialist end of the market, so the limited company type stuff. So it's great to see another lender come into that space. These tend to be particularly relevant to those landlords who are investing in the north of the country, those kind of lower value but very, very high yielding locations. In terms of the mortgage lender, into what they're looking to lend to, so no minimum income requirement, no maximum number of properties in the background. They will lend up to £5 million to one borrower, so really generous exposure limits with the mortgage lender, and they will lend to limited companies and individuals. We've seen the West Bromwich consolidate their product range. So what they have done is remove their 65% loan to value products, and now all of their rates are available to 75% loan to value. They've also reduced the pricing on the 75% loan to value rates. Their pricing now starts from 2.94%. The West Bromwich rates are really, really good in the market. The arrangement fees are 1% of the loan amount. They do tend to offer incentives, so free valuation, cashback, that kind of stuff as well. So really, really good product range. You won't hear us mention West Brom very often on these videos because they just don't change their pricing or their criteria very often. Having said that, they are a truly wonderful lender. They're a very small lender, but that doesn't mean that they're not great on service. It's a very personal approach to lending, and we really enjoy dealing with them. We do a large amount of business with these guys. So in terms of the West Brom and their offering, the first thing to say is that they only lend to limited companies. They're not lending to individuals. They have a no minimum income requirement. You can be up to the age of 80 at application, and you can have up to a 35-year term from that point. So that's very, very attractive. You can have up to 10 mortgage properties with the West Bromwich. And the thing that I feel really sets them apart in terms of their offering is that they do not request any personal guarantees, and they are I'm struggling to think of any other lender in the market who does this, but they will not seek to take personal guarantees from anybody when they're lending to limited companies. Now, that's not to say that they're not going to underwrite the people who sit behind the company, so the directors and shareholders. They do want to know who's in charge of the business, who's going to be managing their property they've got their security against. There is underwriting that takes place, but they're not asking for personal guarantees. So great to see that the West Brom have reduced their 75% loan to value pricing. Most of the lending they're doing is at 75% rather than 65%. Why they've made this change, I couldn't honestly tell you, but the good news is that the rates have ultimately come down. Now, Precise Mortgages have also entered the 80% loan to value lending space. I should say re-entered, they used to lend at 80%, but it's great to see them back there. Pricing starts from 3.79%. This is available to limited companies and individuals. They are able to offer 80% loan to value on HMOs and multi-units. In the world of Precise, they'll go up to 6 beds or 6 self-contained units on these property types. And the 80% loan to value is available up to £500,000 worth of borrowing. I had a quick look to see where their pricing sits in the market, and I think it's fair to say that in the main, if you're looking at 80% loan to value lending through a limited company, 3.79% is kind of where the pricing starts. So Precise have not come in undercutting anybody, but they're certainly at the very bottom end of the pricing matrix in that space. Precise, a brilliant lender, owned by One Savings Banks, a part of the same group as Kent Reliance, who went to 80% lending over the last couple of weeks, and no great surprise to see Precise doing the same thing. Very, very landlord friendly, so no minimum income requirement, no maximum properties in the background. They have a really, really flexible approach to how they stress the background portfolio. So for portfolio landlords, lenders, what they tend to do is say, well, the background portfolio needs to cover itself at, say, 125% at 5% or something along those lines, and it does vary greatly between lenders. What Precise have is a sort of calculator, which is not a set kind of calculation in the way that I've just sort of explained it to you. It's very, very different. What we find is that ultimately the key point here is that it tends to be incredibly generous. We don't find landlords falling out of bed in terms of the background criteria with these guys. They've also got lots of other USPs as well, but fundamentally great to see yet another lender back to 80% lending. It's been really nice to see the Coventry make some reductions to their rates in the last week also. So their pricing now on 2-year fixed starts from an incredible 1.25%, 5-year fix starting from 1.65%. The Coventry are one of my most favourite lenders. It's just a personal preference thing. I just find them really great to deal with. I think it's fair to say that with the Coventry, they're very black and white in terms of what they will and won't do, and that it actually makes things very, very straightforward when you're a broker. Incredible pricing. Their products all have flat arrangement fees. They offer free valuations, and on remortgages you do get free legal work as well, so really, really competitive. The Coventry are only lending to individuals, no limited companies. They let you have up to 10 properties in the background in terms of for portfolio landlords. Now, interestingly, and this is one thing that I find really, really good, is they do not include within this number anything that you own in a limited company. So if we've got landlords who have traditionally invested in personal names but have now made the move to limited companies, and the total size of this portfolio is greater than 10, but actually the first 9 are personally held, you can still get access to these really good Coventry rates, which you wouldn't be able to do with other lenders in the market who cap at 10 properties, so people like BM Solutions, for example. No minimum income requirement. I think it's fair to say the rest of the policy from the Coventry is fairly straightforward. They're not looking for any type of adverse credit, no early remortgages, no racy properties. They do what they do really, really well, but it's a fairly sort of restricted lending policy, but the rates are just incredible. So great to see Coventry, keep up with the market and bringing their pricing down. We've also seen in the last week 3 more lenders make some rate reductions, which I'm just going to run through briefly. So Capital Home Loans have made rate reductions across their standard property range and also their HMO multi-unit range. and their pricing now starts from 3.1%. Foundation Home Loans have also brought out some limited edition products which have no arrangement fees. And these are available to 75% loan to value. And there's one product set for standard properties and another product set for the HMOs and multi-units. 75% loan to value, limited company and personal name borrowing, and the rates here start from 3.24%. These are actually really, really good rates, right? Particularly because there's no arrangement fee. And also we've seen the Mortgage Works reduce their limited company pricing by up to 50 basis points. Now, the Mortgage Works are an interesting one at the moment. They have really, really competitive rates. They don't hike them up for kind of like a week or two and then they come back down again. And I would imagine this is all about managing business volumes. I don't know, for me personally, I find this kind of off-on approach to pricing slightly disconcerting. You think they'd kind of find a better balance, but you know what, actually, if it means they can bring out really good rates that landlords get to take advantage of, that can be no bad thing. So look, 3 more lenders who have made rate reductions, particularly prevalent in the limited company space, which is obviously great news for you guys. Okay, so house prices, where are we and what's about to happen? So I was reading a report by a company called Really Moving, who are predicting that the annual house price growth will fall to 6.3% by September. And this is due to what they're calling a slowing market. So what they're really saying is going to happen is that the house price growth is really going to sort of, the brakes are really on now. It's going to just go up marginally in August, again very slowly in September, and it's going to level out. And actually what they were predicting is a slight dip of by 0.1% going into the autumn. Now that isn't necessarily the prediction that everyone is making, but I think it's always important just to kind of try and share as much information as we can with you. Other people are much more brilliant about the market. They're expecting things to continue growing throughout the rest of the year. And this is really underpinned by data such as this. Rightmove have reported there is a shortfall of some 225,000 properties on the market at the moment. And RICS have reported that new instructions have fallen, so new instructions of properties coming to market has fallen on the 3rd successive month. So what this is really just exemplifying is the fact there are less and less properties coming to the market, which means that the demand is going to be even more, the requirement of demand is going to be even greater proportionately to the new number of properties coming on, which ultimately will really help underpin the house prices. So yeah, we're not expecting things to go into negative territory. There may be some small regional kind of variations on this, but fundamentally we're not expecting that to happen. But I think it is fair to say that things have certainly quietened down in the housing market front. Now, I was delighted to hear that Robert Jenrick has announced the removal of a requirement for an EWS1 form for properties which are under 18 metres in height. Now, this is on the back of a review commissioned by the government into fire safety, and which found there was no systemic risk of fire in medium and low rise buildings. So if you are someone who has a property where you've not been able to get your EWS1, I know this is holding up a huge amount of, well, people's transactions in terms of both remortgages and also being able to sell, this is really great news for you guys potentially. Now, what we're waiting now to see is how this feeds through, I guess, to lenders' requirements. So since this announcement was made in the last week, what we have not seen is any lenders stand up and say, okay, brilliant, if your property is less than 18 metres high, we don't want the EWS1 form any longer. But we do expect this to start filtering through over the coming weeks. Now, also what the government have announced is there's going to be a new levy for developments over 18 metres in height, so new ones being built going forwards. And the money raised from this levy will be put towards the remediation of those properties with historic defects. And lastly, the government have also announced that the Building Safety Fund will reopen from this autumn, having closed temporarily this year. So all in all, really, really positive step forwards with regards to the EWS1 situation, which is, affecting so many people at the moment. And that is everything from me this week. Thank you, as always, for joining us. I hope you find that helpful. There will be no MFB news next week, I'm afraid, but I'll be back the week after. So until then, the office is very, very much open. So please do give us a call, 0345 345 6788, if you'd like to have a chat or have a look at our website. There is lots and lots of information there. So I'll see you guys in a couple of weeks' time. Please do look after yourselves. Keep dry. I can't believe I'm having to say that to you in August, but it does look like we're in for an absolutely wet few days, and I will see you in a couple of weeks.